Mortgage holders across the country will be breathing a small sigh of relief with the latest snapshot of our economy better than most economists had feared. The annual headline inflation rate was a full 1% less than expected, meaning a predicted RBA interest rate hike could be delayed until next year. Political reporter Jasmine Turlings has more.
Good afternoon. These figures are certainly tracking in a better direction and take some pressure off the Reserve Bank when it meets to discuss the cash rate next month. Headline inflation in the 12 months to June came in at 3.8%, down from 4% in May, while underlying inflation, that's the one the central bank watches closely, remains unchanged at 3.6%. But both those figures are still above the RBA's target band of between 2 and 3%, though it seems more likely now that the central bank will choose to buy itself some more time to assess the full impact of the 3 interest rate rises we saw earlier this year. Welcome news for the government.
Inflation has come in lower than expected, lower than forecast in the budget or by the Reserve Bank, but it's still higher than we would like it to be.
Well, the government's consistently dared the Reserve Bank to increase interest rates through their addiction to spending. The government has consistently played a game of interest rate chicken with Michelle Bullock.
Now, it's also worth keeping in mind the federal government's full fuel excise cut of 32 cents a litre is reflected in this data. The Treasurer has confirmed that relief, which has already been reduced to 16 cents, will come to a complete end at midnight on Sunday. Now, where to from here is largely dependent on a lasting peace deal in the Middle East, and we all know how volatile that situation continues to be.